Hey everyone, welcome back to Paying Theta. This week, I just really want to reiterate what I'm really trying to go out on this channel. I know before it was more of the cash curve puts, and this is very, very similar, but this is with a lot less money. Now, it is a little bit more risk because your risk to reward isn't as good because you're not holding on to these options. However, if you play your cards right, you can see a series of wins like I have done this past pretty much month, except this one mishap with Apple. Iron Condor earnings season. I made this video probably July 30th, so about a month ago, where I kind of further go over what I did wrong. However, I've grown this account back up and I am trying to continue. These, I've sold the AMD. I sold it for $16, um, and it's basically at $2. So I've basically my total return is 87% on these. I probably will take them off the table pretty soon. They've got a few more days left, and honestly, there's not much more. I can only make $2 more, so and I could lose a lot more. So I might take these off within the next couple of days because there's no point in owning them. It's not like I'm going to make any more money off them. That's what I'm trying to say. So that and QQQ, pretty much, I think these companies are going to stay where they're at, or they're going to go up. I don't think they're going to go down past these levels. I think these levels are pretty safe. The QQQ at the $274 has a 94% chance to basically be out of the money, which means it will not go below that. Now, at the time I sold it, it was at the $282 mark, which if you just subtract the numbers from here, it'd be at the $78 mark. So about an 88% chance that I'd win. That's just based on statistics with implied volatility, how much the stock will move within the given time frame. That's all mathematical analytical data, and I'm playing off that data and playing off what I think will happen. So if you add those two together, you can kind of give yourself a little edge, and I think that this drop is just very unrealistic, especially now that it's gone up so much in the past couple of days. So that's where I'm at with Robinhood. I will link my free stock information down below. If you use it, you get a free stock. So keep that in mind, and you can kind of start this process. However, there is some risk involved, so be very careful before you trade options. However, let's go back to our original cash good put covered call wheel strategy. I just want to mention I added something new, my projected yearly income. What I've done is got my weekly income and multiplied it by 50. And I am projected, which I think is really cool to see, projected a little bit under 10 grand a year. So that's awesome. And I'm just reinvesting this. This week I bought another XLK, and I bought some AMD, some more AMD because I think it's going to go up. That's why, I sold a put on it, or at least over here I sold a put on it. So, and it has gone up. I think it's gone up 4% today. So that's good news. Bank of America, I got the 26 call. I know in the past videos I said I was thinking about waiting for X dividend. However, I think the price is pretty high comparatively, and I made a decent bit of premium for 1 week. I mean, nothing crazy, probably 0.5%. But if you think about it, I bought these for $25.50. So really, I'd be making $50 a contract. I'd make $100 this week on top of these two. Or this one is no, that's not the one. So this one's 2 weeks out. So I'd be making, this is pretty much 1% for 2 weeks, so a 0.5% and a 0.5%, pretty much equal. And I make $100 off of both of them if I get assigned. However, I don't know if I will. Who knows? Let's go to Bank of America and let's look at their chart. So as you can see, they've risen back up, and I feel like they're still, I think they're in a downward trend. I know it's gone up. I think it's kind of overbought here. So I believe that it could go down. However, I do not mind getting rid of it at $26 because I've already made my money. In fact, I've made $660 on owning them over since June. So that's good news as well. MGM, still, it's actually just broke above the 22 mark. So I wouldn't mind getting rid of them. I've had them since week 4. It's been a long time. I'm ready to get rid of them. I've made $250 off of them. I've made about 10% if you do the math between these two, about 10% over 10 weeks, or 11 weeks actually, because I got assigned to them. Well, actually, no, it is 10 weeks because I own the shares at week 5 and it's week 15. So 10%, 10 weeks, 1% a week. That's my goal. That's pretty good. I'm down to get rid of them. I like to get these this cash back to go more aggressively at cash puts. I think there's a little bit more premium you could earn on these. So I just kind of want to see if you can see here. There's only 2 or 3 a week. Before I was doing 5 or 6. So I believe I want to get rid of this so I can make a little bit more money. However, the money is still good either way you look at it. Either way you cut it, it's still the same. So let's go back and let me just go down the list. So it talks about my Bank of America, Marvel. So Marvel, I sold a 31.50 put. It's earnings week, but like I said, it's been beaten up the past few weeks. I believe it's going up. Long-term bullish on the stock, and as you can tell, my contract has lost half its value. So that's pretty good. It's at the $35 mark. This call is getting closer to the end money, so I sold it for $45. And I knew it was going up, but honestly, I wanted the money. I really did. $45 seemed like a very fair price, 1%, and it was very far out of the money. I know implied volatility is very high right now, so that's really the reason. But can't complain. I actually would be making $25 off this on top of my $45. And let's see what I made the first week. Made $30.40. So 40, 45, and so that's about $125 in 2 weeks. Really not too bad. That's probably around the 1% mark. So that's really good. And I'm selling puts, and there's a lot of premium of that, over 1%. So that's my Marvel position. Snapchat, same news. I kind of sold a lower put because I was a little bit more bearish on Snapchat, but I still want to own them at that price at the 2050 mark. It pretty much right even where I sold it for. It kind of took a dive, and then it bounced back a little bit. So I sold it right here, huge red day, and then it found some more support, and then it's going back up. So either way, Snapchat's not a bad play in my opinion. And then last but not least, AT&T's been the same. It doesn't move much. It stays around $29, $30, and I own it for $32. But week after week, I'm selling, or not week. It's pretty much month after month I'm selling these. But it's a little bit of money, not bad. It's kind of it's a good dividend play as well. Owning 240 something shares of these. I don't know what I think it's like a 30-cent dividend. It does add up. So, or it's a 50-cent dividend. So really, it's really nice. I got like 4.5 shares off of just owning them because my dividend reinvestment plan. So anyways, that's that. I am down on my assigned positions, $1,200. If you look at my premium collected, it's a little under $3,000. So pretty much made about $1,800. And with my reinvestments, I've made about 6%, 6.7%. So going into these high quality ETFs and high quality stocks that some of them do pay dividends has really it's got me 6% more than I would have had on top of my premium collected, which is about $3,300. So you could do $3,300 subtract I think my $1,200. It's a little bit over $2,000 I'm putting in my pocket after 15 weeks. So really can't complain. I'm just documenting this process. So if you're watching the video and you made it here, if you could just drop a thumbs up and hit the subscribe button to keep watching this content. I love making it. It's very fascinating, and I would love to make more. And honestly, I would love to delve into more of this portfolio to just kind of see where it's going, because it can move a lot in a little bit of time. So thanks for watching, guys, and I'll see you next week.